5 seconds to the open.
Ready?
Who wants to get this thing started right about now?
Welcome to Follow the Money Weekly with your host, Jerry Robinson.
Welcome.
Not just some guru.
Oh, really?
Your host is an economist and a best-selling author.
What an interesting news item. I'd better write that down.
And just someone who likes to make money and help you to make money. Welcome to Follow the Money Weekly. And here he is, Jerry Robinson.
Friends, welcome to this week's edition of Follow the Money Weekly Radio. So glad that you're joining us all around the world. If you want to find us online, you can do so at followthemoney.com. Right there, you'll find all kinds of free information that you can check out. Plus, you'll learn how to become a member of Follow the Money, where we'll give you access to a lot of our research. We've done a lot of research in these markets, in this economy, and we provide our members with the best of our ideas. And that's really what we do. Every single weekend, we have our weekend briefing that goes out, and that is just completely filled with the latest trend alerts. In fact, we just rated 3 new country ETFs as new uptrends in our last weekend briefing. We also are getting ready to make a really big call, I believe, on silver. Silver, just as far as you go back in time, the silver metal has been viewed as money. When you look in the Bible and the Old Testament, the Hebrew word that is used for money is the same word that is used for silver. So silver has always been known as a monetary metal, going back all the way at least to 3000 BC, around the Aegean Sea. We can even go back to the Persian Empire, the Greek Empire, the Roman Empire, the Ottoman Empire. The entire Ottoman economy was based upon silver. And it's no surprise because silver is divisible, right? You can easily divide it. It has intrinsic value. It's durable. It's consistent. And that most important thing for a monetary metal, it is rare. Not as rare as gold, but it is rare. In fact, all of the silver ever mined in history would make a 52-meter cube that weighs about 1.5 million tons. But every chart that I've been looking at of silver over the last several days is just screaming that it looks like it's getting ready to break out. So we would say, and we still need a few more days of price and volume action to confirm this, but we are on the cusp of just saying it's time to buy silver. When I say that, I don't mean as, a store of value. Of course, we want to have silver in our portfolio, I believe, at all times. I think everybody should have a little bit of gold, a little bit of silver. You shouldn't sell everything and buy gold and silver by any means, because the rules of the game can change, right? Suddenly the government can slap a new tax on monetary metals or precious metals. Maybe they could have a distribution fee on precious metals, or something along those lines in a retirement program. So you've always got to be careful about over leveraging in any one area. This is why it's so important to stay nimble. But when a metal forms a new uptrend, or any commodity for that matter, forms a new uptrend, well, you can certainly speculate in that. And that's what we like to do. So in addition to our base holdings, our physical holdings of gold and silver, we are looking to make more speculative trading decisions on silver, seeing what it's doing. Today, I want to talk about 5 different ways that you could trade silver in 2017. And let me just list them briefly, and then we'll go through them individually before we bring on Tom Cloud with his precious metals update. The first way that you can invest or trade silver, to take advantage of a new uptrend, is simply by buying the metal itself, right? So you can buy physical silver, hold it in your possession, and then turn around and sell it whenever the uptrend you feel has ended. Although that may not be the smartest way, but it may be more comfortable for some people, and I totally understand that. So you can certainly trade an uptrend in silver by buying physical metal and holding on to it, and then simply exiting with the physical metal whenever the uptrend has come to an end. And we don't know when the uptrend will end. Trends begin and trends end based upon price and volume action. We don't know when one will start, and we don't know when one will end. So an uptrend, when it begins, you simply want to get aboard. And then whenever the downtrend, or when the uptrend ends and the downtrend begins to take over, then it's a good time to get out. This is the way we trade most commodities. This is the way we trade most stocks and sectors. So the first way that you can trade silver, as I mentioned, is physical silver, buying physical silver, right? You can buy rounds, you can buy bars, you can buy just large 100-ounce bars, or whatever the case might be. So the first way is physical silver. The second way is to use just a regular ETF to get access to physical silver. So they do create ETFs that give you exposure to the underlying price of silver. Let me name a couple of these. There's one that's ticker symbol SLV, and this is the iShares Silver Trust ETF. This one has a good track record of moving with the price of silver, and it does have quite a bit of volume, which we really do enjoy. When you're trading an ETF or you're trading a stock, the most important thing for you to look at, aside from all the other fundamentals, when it comes to actually trying to determine whether it's a right fit for you, is how much volume does that stock or ETF have? If your stock or ETF does not have, in my estimation, at least 400 to 500,000 in daily volume, then you can run the risk of having an illiquid situation, meaning that if you buy a large amount, you may not be able to get out as easy or as quickly as you might like. Well, SLV enjoys about 9 million shares traded in average volume. There's another ETF that matches SLV as far as the exposure and access to silver. It does claim to be a physical silver ETF, so it claims that it has, backing for all of the silver within the ETF itself, and that ticker is SIVR. The only issue with that one is the fact that its average volume is much, much lower than SLV. The average volume on SIVR is around 162,000. So that's a much lower number than our 400,000 to 500,000 that we prefer. So SLV gives you more volume and easier liquidity whenever you're trying to get in and out of a silver ETF. Okay, so the second way is to use an ETF like SLV or SIVR to get indirect exposure to silver without actually owning it. You actually own an ETF that is exposed to silver and that tracks silver. All right, so the third way to get access to silver, to trade silver in a new uptrend, would be to use something we know as a leveraged ETF. One of the most common silver leveraged ETFs is the Velocity Shares 3 times long silver, and it's actually an ETN, an exchange-traded note, as opposed to an exchange-traded fund or an ETF. And we have gone into detail in the past over what those two different things mean, ETNs versus ETFs, for our members. But as far as this is concerned, the ticker of this is USLV. So it's USLV. And what this 3x leveraged long silver ETN does is it gives you access to silver, but not just the silver price. It gives you access to a leveraged silver price. So this ETF is designed to amplify the gains of silver through its leveraged nature. So what USLV does is it's designed to give you a 3% rise in the ETN for every 1% underlying rise in the price of silver. So if silver goes up 10%, USLV is designed to go up 30%. Likewise, because it's a leveraged ETF, it cuts both ways. So if silver drops by 10%, then you would expect USLV to drop by 30%. So there's a lot more risk involved in using leveraged ETFs. But that is certainly the third way to trade silver. So USLV, a leveraged way to trade silver, a 3x leveraged way to trade silver. So that would be the third way. The fourth way to trade silver is through the use of simply silver mining stocks. Silver mining stocks. Now, when it comes to silver mining stocks, you may be confused. Which one do I buy? Which one will go up if silver prices go up? You would think most silver mining companies would go up when silver prices do go up, and that is true. But they don't necessarily all go up according to the same level. I mean, some silver mining stocks are more poised to rise quicker and are going to attract more institutional money and retail money. It's going to drive the prices of those stocks up quicker. Every single weekend for all of our members, we provide a list of the top ranked silver stocks, along with gold stocks and REITs and high-income MLPs. But as far as silver stocks go, we list out these each and every weekend in our weekend briefing for all of our paid members. And I'll just share with you right now that the number one stock that we have rated, and we rank these according to our SMART score, which is really looking very closely at institutional money flow. So is the big money buying this stock, right? Are they accumulating this stock? Are they buying it? Are they adding it? Are insiders buying it? Does it have profitability? Does it have low liabilities? So we rank all of the silver mining stocks according to 7 criteria that we call our SMART score ranking. And this ranking, of course, changes on a regular basis, but every weekend we alert you, all of our paid members, to what that ranking is for all of these different silver stocks. And right now, the number one silver stock on our radar, according to our SMART score ranking, is Silver Wheaton. That's ticker symbol SLW. The price is currently at around $22. We can see the price of the stock getting to about $30 by the end of the year if things really go well for silver. Our second favorite right now in the silver mining space is Tahoe Resources. That's ticker symbol TAHO. Tahoe Resources is trading right now at around $9 per share. We would expect it, if silver does break out and continue to run and really form a nice new uptrend in 2017, then we could see Tahoe Resources getting up around $12, $13, $14 per share. If you want to see all of our ranked stocks, whether they're silver stocks or gold mining stocks, you can check those out on our weekend briefings. Just simply become a paid member. Go to followthemoney.com/subscriptions, and there you can find out how to become a member and get access to this PDF report every single weekend that we put out for all of our members. So Silver Wheaton, Tahoe Resources, a few other names in our list is Pan American Silver. That's ticker symbol PAAS. We like that stock as well as Silver Standard Resources, SSRI. So those are the top 4 silver stocks right now as we enter the month of February 2017, according to our SMART score rankings. All right, so the fourth way is to simply use silver mining stocks. Now, the fifth way would be to use, and I'm not going to recommend this to you, but you certainly can investigate this, but this is the fifth one. I won't recommend this to you because I think most traders should stay away from penny stocks, especially penny mining stocks of all things. But you certainly can look at very small cap miners and penny stocks, and there are penny stock silver miners. Now, who knows if these companies will ever make money? Who knows if they have a future? And I think that's the guess of the investor, right? So if you want to go out and invest in some of those smaller cap penny silver miners, then you certainly can. Just realize that you're going to be often buying lottery tickets when you enter into this world, because mining stocks themselves, even the ones that are listed on the major stock exchanges, like Silver Wheaton, as we had mentioned, or Tahoe Resources, these companies are not really well run, so to speak. When you look at the financial statements and you see how these companies are run, mining companies are notoriously known for wasting money, burning cash, and just quite frankly, just not being a great store of value for long term. So we really like mining stocks in spurts. We like to buy them whenever they form new uptrends, but we don't necessarily like to hold them just as a buy and hold strategy because they are very, very volatile. So let's recap the 5 ways that you can get an exposure to silver. You can trade silver if it breaks out into a new uptrend. And that is, number 1, the use of silver itself, right? Physical silver. You can call Tom Cloud, or you can reach out to your local physical metals broker, and you can say, hey, I want to buy some silver. I want to buy some physical silver because I think it's going to go up. And then you can turn around and sell that silver back to the dealer for the gain whenever it goes up. With people like Tom Cloud, who's our sponsor, he doesn't charge any back-end fee whenever you sell. So that makes it, really valuable for those who like to trade. The second way to recap how to trade silver, how to get access to it, would be through the use of ETFs, right? ETFs like SIVR or SLV. The third way to get access to silver is through leveraged ETFs. That is things like the Velocity Shares 3X Long Silver ETN, which is USLV. The fourth way is to buy silver mining stocks, and we provide ranked mining stocks for you each and every weekend right here at followthemoney.com for all of our members. And then the fifth way would be to use penny mining stocks. But again, we don't really recommend that. We don't recommend anything for that matter. We're not financial advisors, but we certainly don't recommend or suggest that new traders or new investors should be speculating in penny mining stocks. We think that's a very dangerous area, a place where you'll likely lose a lot of money, especially if you're new to trading. Now, I know before we bring on Tom Cloud here with his update, I know that many people look at silver and gold for that matter and say, Jerry, those markets are manipulated and they're controlled, and therefore I feel uncomfortable investing or trading them. Well, it is true that silver prices in particular are controlled and manipulated by two primary commercial banks. One is Canada's Scotiabank, which is not nearly as big of a offender as the second commercial bank that's involved in silver, and that is J.P. Morgan Chase. I recently read in a report that eight traders are short 50% of the entire COMEX silver's future market. So it is a big game to these commercial banks and some other high-flying traders to get involved in these markets and control and manipulate them. So as long as J.P. Morgan Chase and Scotiabank remain in the game, then they can continue to manipulate and control prices. So whenever silver breaks out, you can see the shorts come out pretty quickly, and it pushes the price of silver back down. And so because of this is a really strange phenomenon because we really don't know, you and I, modern man, we don't know what the free market price of silver really is, right? Nor do we know the free market price of gold, for that matter, because they are manipulated and they are controlled. And when J.P. Morgan Chase finally decides to hang up the gloves and be done with that game, it will be very interesting to see what happens to the real underlying natural price of silver. And it is our opinion that price, that natural price, that real free market price of silver is much higher than where we stand today.
Follow the Money Weekly presents your precious metals market update. Here's Tom Cloud.
This is Tom Cloud with this week's Precious Metals Market Update. I want to get right into offshore. That's where most of the questions are coming in. Today is the 31st day of January 2017. And as I begged y'all 3-4 weeks ago that this is going to be an incredible year for silver and gold, but silver in particular, as we close the first month of the year, silver's up 8.8% for 2017 in 1 month. Gold's up 4.6%. There's nothing even close to it. The stock market's up 1 or 2%. It's nothing like what we're seeing in the metals market. And all I can tell you from my sources I've had for many, many years, especially in Asia, that this thing is getting ready to explode wide open, and especially the silver market. But what I want to do is, because silver is so heavy and we have so many inquiries daily, Dan, Kathleen, and I want to go over the storage because I think it's important. Number one, we have set up the lowest storage rates in every venue that we use, 5 of them I'll mention in a minute, for you, the customer, because we don't take a markup. We don't feel it's fair. We make our fully disclosed 2.5 or 3% commission one time, and that's it. We arrange the storage for you. We ship the metals to the storage. Depending on where it is, it's free. There's a couple of them where you have to pay extra to have it shipped there, and we'll get to that in a minute. But the key is we're setting you up where you can go in and own this silver where there's no shipping charges because of the bulk of silver. When you're ready to sell it, we have wholesalers set up in every venue to take delivery at that position or that place where you don't have to worry about spending a lot of money shipping it somewhere back to the United States or somewhere to a wholesaler, because we arrange all that. We don't charge a fee for it. You get 100% of what we can acquire for you when you're ready to sell on the back end. So right now, the highlights of that program are you can store it at IDS, International Depository Services, Delaware, or IDS Canada at only 20 basis points a year, which is unbelievable. That's $20 per 10,000 or $200 per 100,000, where the average is 4 times that, because almost every other firm not only has to pay the IDS, but then they put a markup on the storage that as long as you leave it in there, you're paying them over and over and over again. And we don't think that's fair or right, so we don't charge that. So that's how we have the lowest storage fees out there in every location that we deal in. So in Canada and Delaware, it's 20 basis points. If you want to store in Caymans, at the new SWP, Strategic Wealth Protection, we have an agreement where you only pay 50 basis points, and the same for Singapore at Malik Amit, where you will only pay 50 basis points and not the 75 to 150 basis points that you see with most vendors. So you can take delivery of your metals in the trade-free zone over in Singapore. But remember, trade-free just means there's no tax. It still has nothing to do with income tax. I've had several calls where they're really mixed up, where other companies have led them to believe that they don't have to pay income tax if they make trades in their account in Singapore, but certainly that's not correct. So there's 4 of them, and the last one is New Zealand Vault. It's been around since 1958, halfway around the world from the United States, 13 hours ahead of us in the Eastern time zone. So what's key there is if you want something to completely diversify down the Australia, New Zealand area, NZ Vault is the best. And there we've got an arrangement of 65 basis points. There's just nothing they give to anybody cheaper than that. So we have 5 places you can store your gold and silver, and 2 places, Cayman and New Zealand, where you have to pay shipping. But in Cayman, we have wholesalers now building their inventory up. So if you buy something that's already there, you don't even have to pay 50 cents an ounce for gold or silver to send it there. You certainly don't want to buy silver and have it sent down there. If you're interested in buying silver offshore, you need to buy whatever we can buy for you to where you don't have to pay the shipping. And we can do that at 4 of the 5. New Zealand's the only one where we don't have access to silver already there. So this is very important as we move into what we think. After 41 years of doing this next month, I have no doubt in my mind that this is a time to buy silver. It was a month ago, 8.8% later, it still is. And I'm saying it's not going to dip back down. No, I'm not saying that. What I'm telling you is so defined in an uptrend market that we are going to see, in my opinion, a doubling of silver in a short period of time. Some people are saying 2 or 3 months. I'm not saying that. I'm saying that you're going to see the double of silver from $16.12 where it ended 2016 up to $30 in this year and next year, in my opinion. It could happen very quickly, but there's nothing out there that has the upside potential that silver has. We've gone through the reasons many times. I don't need to go back through them. So all I'm saying to you is whether you take delivery of the silver by monster box of Eagles or Maple Leafs, or you're storing COMEX 100-ounce bars that have the lowest premium, whatever form of silver you're buying, and whether you're taking delivery or whether you're storing in the warehouse, it's time to move, and to move quickly, because it's my opinion, educated opinion, from talking to people in Singapore in particular, that it's not going to be long before J.P. Morgan and others go long. They've been buying all this physical silver up, and when they're ready to run the physical silver up, they'll go long in the paper market, just like they did in 2000 to 2012, where we had 12 straight years of gold going up, and I think silver went down 1, maybe even 2 of those years, but gold went up every year. But that's going to be the case because now they want to run the thing up, and the premium you'll get on physical will be much higher, and that's the reason you don't want to be in an ETF, because all you can get back is paper. All you can get back, you can't have physical gold or silver. And there, can you imagine somebody with hundreds of millions of dollars, and I'm giving you a better deal than those ETFs have for storage. You've got a better deal than the ETFs have, GLD and SLV and others. So that's about all we can do on that. So I won't spend the whole time this week on that, but certainly if you're interested in setting up a precious metals, self-directed precious metals IRA, give us a call. We'll tell you how to get the custodian. We'll function as your broker. We'll talk to you about what percentage gold and silver, and even if you want platinum or palladium in that, we'll go over all of that. But you can reach us at 800-247-2700. 800-2812. That's 800-247-2812. And certainly, if you want to know the economic reasons why we're so bullish on silver, we'll go over those with you individually. But it's very important that you take a position in silver, no matter how small or how big. You're going to be very pleased with that position. Am I saying don't buy gold? No, not at all. We're still selling a lot of gold. We've had some very large sales in the last month, people moving into gold because central banks in Europe are buying it, and I've confirmed it with Asia. I've even got a number of what they bought that I can't state publicly. But let me tell you, central banks are smart enough to be getting out of paper money. And last thought I'll leave you with this week is China and Japan own $2.47 trillion of the 20 trillion U.S. debt. So about 20% there for two countries. And when they're ready to crash the dollar, which I still think will be part of why silver is going to double the next 2 years, when they start trading and the dollar starts down, and you're going to see a very, very smart Japanese and Chinese liquidating their U.S. treasuries. And remember, we've got a fight going on between Trump's Treasury and the Federal Reserve, not to be related in any way. Two, one's a government agency, one's a private company that only has Janet Yellen as a government employee. And Janet Yellen has stated she and Trump's administration do not get along, and she has stated that they will not, when there's no buyers of treasuries, they're going to make the Treasury buy them, because she represents very large, wealthy international families in the Federal Reserve. And they don't want to buy a debt that's going straight down. Anybody that's holding bonds at this time has got to be crazy. This is a bond market where it's going to continue as Trump's economic market heats up. We're going to see interest rates going up, and we're going to also see a big drop in the dollar as inflation picks up also. So you've got to get out of bonds. It's been in a 35-year bull market. Don't let anybody talk you out of it. You need to be going to the sidelines and rethinking your strategy. Let us help you. Give us a call, and we'll be happy to go over with Dan, Kathleen, and myself. We'd love to explain that to you. With this week's Precious Metals Market Update, this is Tom Cloud signing out.
All the good hearts have been taken.
Hey friends, this is Jerry Robinson from Follow the Money Weekly. Recently, we have been receiving many emails from our listeners commenting on the great help they're getting from our precious metals expert, Tom Cloud. Gold and silver are excellent hedges against the growing threat of coming U.S. inflation. Who's your gold guy? Make it Tom Cloud. With over 30 years experience with precious metals, Tom will answer all of your questions. Don't buy your gold and silver through some call center and pay inflated prices. Call my good friend Tom Cloud and speak directly with him and get all of your questions answered. For a limited time, Tom is offering free shipping and insurance on every gold and silver purchase made by our listeners. Call 800-247-2812. And when you do, tell him that Jerry Robinson from Follow the Money Weekly sent you, and he'll throw in that free shipping and insurance on your entire order. Call your gold guy, Tom Cloud, right now for the very best deals on gold and silver coins. 800-247-2812. That is 800-247-2812.
All right, friends, and that brings us to the end of our program. Thank you so much for choosing to allow us into your life each and every week right here on this broadcast. And as always, I leave you with this final word, this time the wisdom of Mad Magazine's Alfred E. Newman, when he said, "We are living in a world today where lemonade is made from artificial flavors and furniture polish is made from real lemons." And that's just something to think about. Remember, friends, when you want the truth about the global economy, just follow the money. Have a safe and prosperous week, and we'll see you right back here next time. Until then, God bless.
All of the information contained on the Follow the Money podcast is strictly for informational and educational purposes. It should not be construed as specific investment advice. The views and opinions of our guests and sponsors, including Tom Cloud, are their own and do not necessarily represent the views of FTMDaily.com or Robinson Media Group, LLC. Jerry Robinson does hold an insurance license and at times may offer consulting on life insurance and fixed retirement income products. Follow-up, individualized responses to email or phone requests that involve the rendering of personalized investment advice for compensation will not be made absent compliance with state investment advisor registration requirements or an applicable exemption or exclusion and applicable insurance regulations. Past performance is not indicative of future results. You should be aware of the real risk of loss in following any strategy or investment discussed on the podcast. Remember, never do your financial planning through podcast or radio. It's your money. Be wise. Do your due diligence and always consult a trusted financial professional before